Assalamu alaikum everyone and welcome to F7 Financial Reporting webinar for June 2018 attempt. I'm your tutor Hamza Abdul Haq and I will be taking you throughout the course. A brief tutor's profile. I'm an ACCA member experienced from Deloitte, Pakistan, and I've been teaching ACCA since last 9 years. And I've been teaching ACCA papers F7, F9 and P2, and I have been able to produce multiple nationwide positions in different attempts. Historically, I've been producing pass rates above the global pass rates throughout my teaching career, and I've conducted multiple training sessions of IFRS that have been officially conducted by ACCA and ICAP. ICAP is the local body of Pakistan. Let's discuss the paper pattern. We are starting with an overview. Um, in the exam, you're going to find three different sections: Section A, Section B, and Section C. Section A will be having 15 OT questions of 2 marks each. That will make a total of 30 marks. In Section B, you are going to have 3 OT case studies with 5 OTs in each case study, making total 15 questions OTs of 2 marks each, making again a total of 30 marks. So 15 questions in Section A and 15 questions in Section B. And you will be having 2 different questions in Section C, which will be constructed response questions of 20 marks each. This will make a total of 40 marks. Normally in ACCA paper F7, these 2 constructed response questions normally comes from ratio analysis. One question is going to be from ratios. And second question is normally either from final accounts or from consolidation. So these are 2 different areas which are normally examined in the constructed response questions. Apart from this, the question may include a small area of statement of cash flows in either the question of ratios or along with the final accounts. Similarly, the ratios also includes the ratio analysis on the consolidated financial statements. So the consolidation question can also be mixed with ratio questions, such as a case of disposal of subsidiary. So this is how you're going to see the exam, a total of 32 questions. If we divide this, the section A is of total 30 marks, section B is of total 30 marks, which makes a total of 60 marks. And section C is of 40 marks. So normally my approach to teach is that if a student has a strong grip on section C, because the number of areas here are comparatively limited as compared to section A and B. So the areas which can be asked in section C are comparatively limited. So the students can focus on this more and try to score 30 marks out of this 40. If a student is able to score 30 marks out of the 40 marks, he needs only 5 OT questions from section A and 5 OT questions from section B to be able to pass the exam. So we need total 50 marks to pass. We are going to score 30 from section C, 10 from section A and 10 from section B. So out of 15 OTs, you need to mark only 5 of them correct. And similarly in section B also, out of 15 OTs, you need to mark only 5 of them as correct. So 5 OTs from section A, 5 OTs from section B, and 30 marks from section C. 30 marks basically means 15 marks in each of the question. So normally what happens is that if the question is of 20 marks each, there are going to be 5 marks which you would not be able to apply them correctly in the exam because of the exam pressure, because of the level of difficulty of that adjustment. So in normal circumstances, I should expect a student to at least make 5 marks incorrect in every question. So that is the area which we don't want. We want only 15 marks out of the 20 marks area to be able to pass the exam. Now, you would be aware of the seeded question that will be there in the exam as well. Now, what is a seeded question? That 10 marks of seeded questions will be included either in the form of 5 OTs in section A, which means section A will become of 20 OTs, section B of 15 OTs. But out of these 20, only 15 will be marked and 5 will not be marked, which will be called seeded question. The questions are there, but they are not going to be marked. And or there will be one OT case study in section B, which will make 15 questions in section A and 20 questions in section B. So either you are going to have 20 questions, 20 OTs in section A or 20 OTs in section B. But 5 OTs will not be marked, and these will be called the seeded questions. If you people have any question, you can post it on the computer screen. I will be able to answer your questions as well. So you will be having an option to chat and to write down the questions. You can post your question anywhere. I will be able to see that. Now the time available to you is going to be 2 hours and 20 minutes. The time available is going to be 2 hours and 20 minutes. Now how you are going to divide your 2 hours 20 minutes, how you are going to plan your exam. So for this we say that normally if I say 2 hours and 20 minutes means 140 minutes. 2 hours and 20 minutes means 140 minutes for how many marks? For 110 marks. So 60 minutes in 1 hour, 60 minutes in 1 hour, 2 hours means 120 minutes, and 20 minutes means 140 minutes. So if I use a calculator, you have 140 minutes for 110 marks. So on an average, you have 1.28 minutes per mark. You have 1.28 minutes per mark. But for example, if one OT is of 2 marks, so you have 1.28 into 2, which makes you 2.56 minutes. What if we save 0.56 minutes from this and we try to solve one OT in 2 minutes? The 0.56 into how many OTs will be there? 35 OTs will be there. So 0.56 into, sorry. So 0.56 into 15 OTs and 20 OTs makes it 35. So you are going to save approximately 20 minutes from the OT questions. Now these 20 minutes will be used in constructed response questions, the CR questions. In CR questions, you have 20 marks into 1.28, sorry. So that will become 25 minutes you will be having for a CR question, plus you have saved 10 minutes in the MCQs. So you will be having a total of 35.6 minutes. Have I done anything wrong? 20 into 1.28, 140 divided by 110. Okay, yes. So approximately you will be having 35 minutes for each OT, for each constructed response questions in the exam. Even then, if you feel that the number of time you are having is comparatively less, then you will be required to save more time in the OT questions. Usman Pervez is asking that will the seeded question marks would be swapped for the wrong answers? No, Usman. If there were 5 seeded questions and you have marked 5 of them correct, you are not going to get any mark. You are going to get 0. And if you have marked all 5 seeded questions incorrect, you are still going to have 0, because the seeded questions will not be marked, neither in the total nor in the marks scored. So you will not be aware of which questions are actually seeded questions. Tajwar is saying example of seeded questions. Tajwar, the seeded questions will be the same as of the normal questions. So in the exam, you won't be able to identify which are the seeded questions. Okay, Lavender is saying that what's the importance of seeded question? That is a good question, Lavender. Actually, seeded question will balance off the exam. For example, if you are finding the exam too difficult, if in the exam you find it too difficult, this means that there are some difficult questions which are seeded and they won't be marked. So the paper will always be a balanced. If you're finding the paper too difficult, this means that 5 of the difficult questions may be seeded question. And if you're finding a paper too easy, this means that 5 of the seeded questions are going to be from the easy questions. So the paper will be overall balanced. It will neither be easy nor be difficult. So the seeded question is basically trying to create, I would say, a pressure on the student. And so if, for example, you are finding the paper too difficult, this would mean that it is not actually difficult, it is the seeded questions which are difficult. But you won't still be able to know the time. Okay, yes, Sheroz, I think there is a mistake. Can you people hear me properly, everyone? Can you people hear me? Okay, yes, everyone is able to hear me. That's good. Okay, yes, there is one mistake in actually over here. The time available is 3 hours and 20 minutes. So this is not actually 140 minutes. This will become 180 plus 20. That will be 200 minutes. So let me recalculate this. 3 hours into 60 minutes plus 20 minutes will be 200 divided by 110 marks will be 1.8 minutes per mark. So this is actually 1.8 minutes per mark into 2 is equals to 3.6 minutes that will be available. So you have to save actually zero point 0.6 minutes from this, and you have to invest 3 minutes in one OT question, and the zero point 0.6 minutes saved into 35 will actually give you 0.6 into 35 will actually give you 21 extra minutes. So again 10 for one CR question and 10 for the other CR question. And the normal time available will be 1.8 into 20. So 36 plus 10 will give you 46 minutes. So in OT questions, we are going to apply 3 minutes per MCQ. And for the CR questions, we are going to apply 45 minutes approximately per question. So this is the division of the time that we are going to apply in the exam. 3 minutes per MCQ and 45 minutes per the CR question. Okay. Now let's move further. Let's have a quick overview of the paper linkages. That the paper F7 is basically an advanced paper of F3, and the knowledge will be carried forward to the paper P2. Some of the knowledge will also be transferred to F8. The dotted line means some of the knowledge. The complete line means a majority of the knowledge. Similarly, some of the knowledge comes from paper F4 and some of the knowledge goes to paper P3, which will become SBL after June 2018. So these are different paper linkages of paper F7. So if your F7 is strong, it will help you in P2, it will help you in F8, it will help you a bit in P3 or SBL. And similarly, if your F3 was weak, you are going to have a tough time in paper F7. So all these linkages are important to understand that what importance your paper is actually having. Now let's have an overview of the capabilities which are required in paper F7. There are 4 different sections: section A, Part B, Part C, and Part D. Now I have actually divided these into different priority levels. The dark green means top priority, which means Part B and Part D. The light brown type means normal, and light green means low priority. So let's start with the dark green ones, the top priority. This will include the accounting for transactions in the financial statements, which means all of the accounting standards in IASs or the IFRS. And the second is preparation of the financial statements, which means the preparation of the entity specific financials as well as the consolidated financials. Both will be included in Part D. And Part C is the analysis and interpretation of the financial statements, which means actually ratio analysis. And Part A is the framework, which includes conceptual and the regulatory framework. So this is an overview of the capabilities that are required to pass your paper F7. Now, if we further go into the details of these capabilities, Part A has 2 areas: conceptual framework and the regulatory framework. Even out of these, regulatory framework is comparatively less important and conceptual framework is comparatively more important. So if you have less time, which areas to focus? These areas to focus. But this does not mean that you can leave these areas. You should be able to apply every area, but if you have short time, go for these. In part B, we have tangible non-current assets, which includes IAS 16, IAS 23, and IAS 40. We have financial instruments, which includes IAS 32 and IFRS 9. This includes leasing, IFRS 16, taxation, IAS 12, revenue, IFRS 15, impairment of assets, IAS 36, foreign currency transactions, which is IAS 21. Apart from this, we have inventory IAS 2, we have biological assets IAS 41, we have provisions IAS 37, we have events after the reporting period IAS 10, we have government grants IAS 20, we have intangible assets IAS 38. These are comparatively less important areas, and these are comparatively more important areas. And then we have ratio analysis, ratios calculation, and interpretation. In a 20 marks question, you are going to find approximately 8 marks relating to the calculation of the ratios. In a 20 marks question, you are going to find 8 marks approximately from the calculation of the ratios. So even if your calculation of the ratios is strong, you are approximately halfway through the question. If you score 8 marks from the calculation, these are easy marks. Obviously, you are almost there. You just need 7 more marks according to our target. We had planned 15 marks in section C. So these 7 marks you need from the ratio analysis, from the limitation of the financial statements and the other areas which are also a part of the analysis and interpreting the financial statements. And then we have preparation of the financial statements, which includes entity specific, including the cash flows and the consolidated financial statements. So this was an overview of your syllabus, which areas actually you need to learn. Okay, Kalsum Fatma is saying that she cannot see the working, she can only see the camera. Okay, Kalsum, I think there's some issue from your side. And okay, now let's move further. And now we are going to start the QBR session, question-based review, where we are going to solve different questions. The plan of the day-wise plan was already shared with you. Let me give you an overview again. In day one, we are going to solve 2 different questions of final accounts, the entity-specific financial statements. In day 2, we are going to solve 2 questions relating to the consolidation. In day 3, we are going to solve 2 questions relating to the ratios, which means that your section C of 40 marks is going to be covered from over here. And you need to score 30 from this. My target is to make you able to score at least 30 marks from section C. And then in day 4, we are going to solve section A type MCQs. And in day 5, we are going to solve section B type MCQs. So this ways we are going to cover the majority of the paper in this short QBR session of 10 hours in 5 days. If you people have any suggestion, I will be happy if you share with me that. Now let's start the QBR session for papers F5 to F9, because the paper pattern is CBE. So I would want to solve the paper in the real exam environment. So I'm using Chrome. I have used Control Shift N to move into the incognito mode. And I'm going to access a website by the name of gocbglobal.com. This is one of the websites that provides the real exam environment. Okay, Wilson is saying that will you share the presentation? Okay, Wilson, I will be sharing the presentation. In fact, I will be creating a WhatsApp group for the QBR session so that all of you can join me in the WhatsApp group. Apart from the QBR time, I will be there with you on the WhatsApp. You can have your discussions with each other. You can have your discussions with me. So I will create a WhatsApp group today, and we'll share the details in tomorrow's session that you can join. So now this is the website of GoCB Global. It is taking time to load, and I'm going to click on the register button. I'm showing you how you're going to create an account of your own and how you're going to access the QBR questions and the other material that is being provided by GoCB Global. So now this is a registration page, and I am using my email address hamzaabdullah@gmail.com and my first name, my last name, my country, my city. No need to write the address, and my contact number. You can also save the contact number if you want to contact me on WhatsApp. It's +92 334 373 9 697. So you people can save the contact number and contact me on WhatsApp. So I've filled the form and I've clicked on the register button and I have been registered, and these are the papers that are available on the GoCB Global. I have added a paper by the name of F7 Financial Reporting Webinar June 2018. In this, I'm going to upload all of the material that we will be solving so that you people can also solve these questions at your home in the real exam environment. I would not suggest you people to use the Microsoft Excel. Instead, you should be using the real exam environment from the ACC platform or from GoCB or from someone else which is providing the environment close to the real exam environment. Okay, so now in day one, we are going to solve two questions, one by the name of Candy and one by the name of Moby. So for example, if I click on Candy question, a new window will open with some introduction, with some instructions. If you read the instructions beforehand, before going into the exam, it will be helpful for you. And now a final message that are you sure you want to start the exam? Yes, I'm sure. Here's an option of previous exam sessions. What is this basically? For example, if you were attempting a test and due to some reasons the internet gets disconnected or there's some electricity problem or there's some any other problem, your test will be saved in this list. So your work will not be actually lost. So let me start the exam now. Santesh is asking that what is the website? It's www.gocbglobal.com. I'm sending this to all. Okay, Rachel Sati is asking that what have we selected? I've selected this question first, Candy. If you people can also register along with me and you can also see the screen alongside, that will help you more. So that if there's some working which I'm doing and you want to try this in the real exam environment and immediate basis, so you can try alongside. So go on to gocbglobal.com, click on the button register, fill the form, and then in the courses, I've selected the course as F7 Financial Reporting Webinar June 2018. This is the course right now. No, this is not the specimen paper. This is the material that we will be solving in the webinar. So I'm solving the question of Candy first, and then we'll be solving the second question of Moby. So let's start the question. Are you people ready? Should we start now, or you are creating the account right now? Actually, Rachel, I think you have gone on to some other exam. Don't go on to F7 June 2018. Go on to F7 Financial Reporting Webinar. Webinar June 2018. This is the right option. Okay, Wilson is ready. Let me also have some water. Okay, so now we are starting the exam. Now I'm going to start the question from the requirement. Requirement is prepare a schedule of adjustments. Prepare a schedule of adjustments. In the exam, you're going to have an option to highlight the important areas. So I'm highlighting this, that my work is to schedule the adjustments required to the retained earnings. Adjustments required to the retained earnings of Candy Company as at 30th September 20x5 as a result of the information in notes 1 to 3 above. So we need to prepare a schedule of adjustments where we are going to recalculate or adjust the retained earnings. In part B, the question says that prepare a statement of financial position, which means a balance sheet of Candy Company as at 30th September 20x5. This is my year end. And in the note, question says that the notes to the statement of financial position are not required. So we're not going to prepare any notes. We will be preparing the schedule of adjustments, and we will be preparing the balance sheet. Rachel is saying this for the rest of the exam also. Yes, Rachel. Actually, I have not got your question properly. In part C, question says that prepare the extracts for Candy Company's statement of cash flows for operating and investing activities. So we need to prepare a cash flow statement as well for the operating and the investing activities for the year ended 30th September 20x5, which relates to property, plant, and equipment. So we are not required to prepare the entire operating and investing activities. We just need to prepare the operating and investing activities relating to property, plant, equipment, not the entire. So you're not going to start from PBT and everything else. Saifullah Islam is saying, will the section A, B, C have separate time limits? No, Saifullah. The exam will be timed entirely 3 hours, 20 minutes, and you can spend as much time as you want for each section. Okay, Rachel is saying for other CB exams like F5, F9. Yes, Rachel, you can use this website for all of your papers from F5 to F9. And there's one more question. Are we going to solve the questions or we will be explaining the standard? Actually, we will be solving the question and we will be understanding the IS a bit of it. So if you people have any question relating to that standard, do ask that question. So I'm starting the question after preparing a draft statement of profit or loss for the year ended 30th September 20x5 and adding the current year's draft profit before any adjustment required by note 1 to 3 below to retain earnings. The summarized trial balance of Candy as at 30th September 20x5 is. So the question actually says that they have prepared a statement of profit or loss and then they have added the current year's draft profit. Added where? Added to the retained earnings. Okay, so now what we need to do is that we will be reproducing or we will be preparing a schedule of adjustments. So I'm writing part A, schedule of adjustments, where we will be starting from the retained earnings as per the trial balance. So I've written the values over here, and if I double click on this, it will automatically adjust the column width, and I can even click and drag it accordingly. So the question has given us equity shares of 20,000, retained earnings closing of 15,500. This is from where we need to start. And proceeds of 6% loan notes being 30,000. Investment properties at fair value. Investment properties means IES 40. And the investment property has actually two models, the cost model and the fair value model. So this investment property is being measured at fair value, means at the fair value model. And then we have a land of 5 million and building at cost. The total is 35,000, which means 5,005,000 relates to the land and remaining 30,000 relates to the building. We have plant and equipment at cost. We have accumulated depreciation. If you see, the date of the depreciation is 1st October 20x4, which is the start of the year. This means that the asset has not been depreciated for the current year. This means that the asset has not been depreciated for the current year, and the accumulated depreciation for plant and equipment is 34,500. Current assets are 68,700. Current liabilities are 43,400. Deferred tax is 2,500. The deferred tax value given to you in the trial balance will normally be the brought down balance. We will be calculating the carried down, and then we'll be preparing a movement, a double entry. And then we have some interest paid of 1,800 that would probably relate to this proceeds of 6% loan notes. The loan was of 30,000. The interest rate is 6%. So 30,000 into 6% will give us 1,800. And this is the value provided to us in the trial balance. And then we have a current tax of 1,100. Any current tax given to you in the trial balance is actually an under over provision relating to the previous year. And then we have a suspense account of 17,000. The debit side is 184 and the credit side is 184. So we have gone through the entire I would say trial balance. Okay, now we are reading the adjustments. The question says that the loan note was issued on 1st October 20x4 and incurred issue cost of $1 million. And incurred issue cost of $1 million, which means that the issue cost, the transaction cost needs to be deducted from the loan notes, which were charged to profit or loss. What the question has done, the question has mistakenly charged the issue cost to P&L. Interest of 1.8 million was paid on 30th September 20x5, which is also given in the trial balance. The loan is redeemable on 30th September 20x9, which means that our year end was 20x5 and the loan will be repaid on 20x9, which means that this is a non-current liability at a substantial premium, which gives the effective interest rate of 9% per annum. So the effective rate is 9% per annum. No other repayment are due until 30th September 20x9. No further amount needs to be paid. Are you people aware of the accounting of the issue cost, or you want me to explain you once? Are you people aware of the accounting of for the transaction cost, issue cost, or you need me to explain it once? Okay, everyone is saying explain, 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 explain once. Okay. Okay, let me explain. Let me open a OneNote, or even I can use the PowerPoint to do this. Okay, so now let's create a new page in this. Okay, now let's understand this, that the loan notes are basically a financial liability to us. We have taken loan from someone and we need to repay that loan. Now, for example, I have taken a loan. The entry should be bank debit and the loan notes being the financial liability credit. Let's suppose I've taken a loan of $100 million. So the entry should be bank debit, loan notes credit. and I've taken the loan for 4 years. I've taken the loan for 4 years. Now I have incurred a transaction cost, an issue cost of, let's suppose, $2 million. Now, logically, this transaction cost, what should be the treatment of the transaction cost? Should it be expensed or what? What do you think the treatment should be of the transaction cost? If I've paid $2 million for the transaction cost for the issuance of the loan notes, what should be the treatment? Usman says deducted from the amount received. What about others? Expensed. Kulsum says expensed if short term in P&L. Toyeb says should be deferred, excluded, expensed. Actually, the transaction cost, majority of your people are right that the transaction cost is expense. I agree. But this is not an expense for any specific year. This expense, in return of this expense, we are going to receive loan for 4 years. So the expense 2 million will provide us benefit for the next 4 years. And according to the matching concept, the expense should be recorded over the period when we get the return. So this 2 million is an expense, but for how many years? For 4 years. So we should not be expensing $2 million on an immediate basis. Instead, we should amortize, we should distribute, we should spread the cost of $2 million over a period of 4 years. So the $2 million transaction cost is an expense, but it is an expense for the remaining 4 years. So for the time being, what do we do is that we debit the loan notes by $2 million and bank credit by $2 million. Why loan notes debit? Because I have paid 2 million, but it is not an expense for me. I have paid $2 million, but it is not an expense for me. So this means this is a type of prepaid expense for me. This is a type of prepaid expense for me, but this shall not be created as a separate asset. Instead, we actually net it off from the financial liability. And that is why it actually reduces the financial liability in the balance sheet. Now, my loan brought down will actually become 98, 100 minus 2. And then the interest expense will be calculated using the effective rate. What is the difference between a coupon rate and effective rate? What is the difference between coupon rate and effective rate? Coupon rate is the rate on which we pay the interest. Coupon rate is the rate on which we pay the interest. And effective rate is the rate which includes the interest as well as the transaction cost that we have paid. So the effective rate ensures that apart from the interest, the transaction cost is also recorded in the interest expense amount. So the effective rate incorporates the interest paid, it incorporates any discount that we have paid, it incorporates any premium that we are going to pay, it incorporates any transaction cost that we have incurred. So effective rate is the rate that actually incorporates 4 elements. Which 4? The interest that we are paying, the discount we are giving, if any, the premium we will be paying at redemption, if any, the transaction cost that we have paid, if any. So the effective rate actually incorporates all these amounts in the profit and loss. So this is why we say that the transaction cost shall not be expensed out immediately. So now let's move back to the question. And what you have to do is, for example, if I see we are writing the answer over here, what we will do, I am stretching the question side onto the left. Now what I will do actually, I will take these 4 columns or maybe 6 columns, and then I will be shrinking this one column, and I will say that I'm going to write my double entries over here. And I will be using again 4 columns for the double entries, and then I'm going to shrink one more column. And now I will be performing my workings over here. I'm using Control B button to make the text bold. Now I'm preparing a table where I'm writing year, brought down, interest expense, interest paid, amortization, and then I'm writing the carried down. Now this is a table that we normally prepare and we call this an amortization table, where I'm going to say that in year one, the loan was actually 30,000 minus the issue cost of $1 million. So the brought down should be 29,000, and the question has mistakenly expensed out the transaction cost. So what I'm going to do is that I'm going to debit the loan notes and I'm going to credit the P&L. Where I have the question recorded? In the profit or loss. And a bit of over here to make sure that the entry looks good. So the loan note should be debited by 1,000 and the profit and loss should be credited by 1,000. 1,000. So effectively what will happen that the brought down is not going to be 30,000. Instead it is going to be 30,000 minus 1,000. So the brought down is 29,000 and the effective rate was given by the question as 9% over here. So equal to the brought down into 9% will actually give me the interest expense. And the interest paid amount was given to us in the trial balance of 1,800. Also mentioned by the question that interest of 1,800 was paid. So this means that the amortization is 2,610 minus 1,800. That 810 is the amortization. The issue cost expensed out, the premium expensed out, the discount expensed out, and the carried down should be 29,000 plus 810. So this is the value that should be taken to the balance sheet. Now I'm writing an accounting entry as finance cost debit, bank credit, and the loan notes credit. By what amount? Finance cost debit by 2,610, bank credit by 1,800, and financial liability credit by 810. So this will actually increase my financial liability to 29,810. 30,000 minus 1,000 plus 810 will bring my liability on to 29,810. So this was expected from the students in the adjustment number 1. Kulsum is asking that are we required to show the accounting entries? No, Kulsum, the accounting entries is not important. But why I actually prefer the concept of accounting entries is because of two reasons. The first reason is that you are going to have control, that three impacts are to be taken. Loan notes to be taken to balance sheet, 1,000 to be taken to P&L, 2,610 taken to P&L, and 810 to taken to balance sheet. Now there are four impacts that should be incorporated. So that I remember these 4 points, I'm writing the double entry. So I personally prefer the accounting through the double entries because of two reasons. One, I have good control, and two, second reason is that practically when you are going to go and work, you are going to pass the double entries. Obviously, if you know the accounting but you do not know how to record the double entry, obviously you will suffer. So when accounting is through double entry, why not follow the double entries? So we have done adjustment number 1. If you have any question, you people can ask. I'm moving towards adjustment number 2 relating to non-current assets. If you people have any question, you can ask. Tajwar is saying if the year end is 20x8, then do I need to split between current and non-current liabilities? No, Tajwar, in loan notes, we never distribute between current and non-current. We will be distributing between current and non-current in IFRS 16 leases. In IFRS 9, in case of loan notes, convertible loan notes, we do not split between current and non-current liabilities. Now the question says that on 1st October 20x4, which was the first day of the year, Candy owned two investment properties. Candy had two investment properties. The first property had a carrying amount of 15 million. The first property was having a carrying amount of 15 million and was sold on 1st December 20x4 for $17 million. We have sold the property for $17 million, which means that we would have a gain of $2 million. The disposal proceeds have been credited to suspense account in the trial balance above. So if I try to write my answer up till over here, I'm going to say that the correct entry should have been bank debit by 17,000. Sorry. The correct entry should be bank debit by 17,000, investment property credit by 15,000, and the gain on disposal to be recorded in P&L credit by 2,000. But the question has said that what they have done, they have prepared an incorrect entry. I'm writing it over here. They have prepared the incorrect entry as bank debit and suspense account credit. So now what should be our correcting entry in this case? The amount that they would have recorded would be 17,000 again. So now what will be the correcting entry? We will be recording the correcting entry as the bank they have recorded correctly as suspense account debit, investment property credit, and profit or loss credit by 17,000, 15,000 and 2,000. Now let's see the amount of suspense account, if it is really 17,000 or something else. Okay, yes, the amount of suspense account is 17,000. So we have actually debited the suspense account and we have closed the suspense account. So now the error that was done by the question have been corrected. The question further says that on 31st December 20x4, the second property became owner occupied, which means that we have started to use the property now. The second property became owner occupied and so was transferred to land and building at its fair value of $6 million. So the question has prepared an entry as PP debit and investment property credit by $6,000. This is what we have understood from the question. Its remaining useful life on 31st December 20x4 was considered to be 20 years. So now we need to depreciate the property over 20 years. Ignore any deferred tax implication on this fair value. So what actually question wants us is that if I go upwards, the land and building had a cost of $35,000. Out of this cost of $35,000, actually we have the land element of 5,000 and we have a building element of remaining 30,000. So this will actually give us the total of 35,000. Now, when we are going to charge the depreciation on building, we will be charging depreciation 6,000 divided by 20. Which 6,000? The amount transferred from investment property to PP divided by 20 will give us the annual depreciation. But this property was being transferred on 31st December 20x4. So we are going to charge the depreciation from 20x4 December. So January, February, March, April, May, June, July, August, September. How many months? 9 months. So into 9 divided by 12, the depreciation is going to be 225 for this. Apart from this, there will be some depreciation further on the remaining $30,000 that we will be charging separately. So let's read the question further. It says that the price of the property has increased significantly in recent years, and so the directors decided to revalue the land and building. Now the directors are revaluing the land and building. The directors accepted the report of an independent surveyor who, on 1st October 20x4, at the start of the year, valued the land at $8 million and the building at $39 million on that date. So we actually need to revalue the property, plant, and equipment. This revaluation specifically excludes the transferred investment property described above. Just give me a minute. Okay, now sorry, let's continue. So the revaluation specifically excludes the transferred investment property that have been mentioned above. The remaining life of these building at 1st October 20x4 was 15 years. So the life of the building is 15 years. Candy does not make an annual transfer to retained earnings to reflect the realization of the revaluation gain. However, revaluation will give rise to deferred tax liability as well. The income tax applicable is 20%. Now, one thing we have to understand, which is very important, that the values given in the trial balance was 35,000. 5 relates to the land and 30,000 relates to the building. But this 30,000 actually includes the 6,000 of the property that has been transferred from investment property to PPE. This includes the investment property that was transferred from investment property to PPE. So when we are going to revalue, what we are going to say that the revaluation gain on land, is equals to 8,000 minus 5,000. The fair value was 8,000 and the carrying value was 3,000. Similarly, the revaluation gain on building, sorry. So the revaluation gain on building is actually 30,000 minus 6,000 because 30,000 includes the 6,000 transferred from investment property minus the depreciation of 20,000 will give us the net book value of the building, which was 4,000. So the net book value of the building was 4,000 and the fair value of the building is the fair value of the building given by the question is $39 million. So the revaluation gain is going to be 39,000 minus the net book value. So this is how we are going to calculate the revaluation gain on the building, which is going to be 35,000. And now we need to prepare the accounting entry. So for the accounting entry, I'm going to say land debit, building debit, and land debit by $3,000, building debit by $35,000, and revaluation reserve credit through OCI by $38,000. So this is the entry we need to record. We need to enter to record the revaluation gain. Okay, Tajul has a question that, okay, this was already answered, sorry. So now we have done the revaluation, but we need to record the deferred tax as well. Now what will be the entry of deferred tax? Revaluation reserve debit again, and deferred tax liability credit by what amount? By 38,000 into the tax rate of 20%. 38,000 into the tax rate of 20%. So the deferred tax liability amount is going to be 7,600. Now we also need to charge the depreciation on the building, for which the question said that the remaining life was 15 years. Now we have already calculated the depreciation on 6,000. So is equals to 39,000, the fair value of the building at the start of the year, which excludes the investment property, divided by 15 years will give us the depreciation on the remaining building. One building was transferred from investment property and one was held previously. So our accounting entry is going to be cost of sales debit and building credit. And we know that the plant will also be credited, depreciated. So the sum of the depreciation of building is going to be 225 plus 2,600, which is going to be 28 and 25. And we know that the plant will also be depreciated. So I'm writing sum of building and plant in the cost of sales. Now for plant, the question says plant and equipment is depreciated at 12.5% per annum using the reducing balance method. So for that, we need to go back to the question. The cost of the plant was 58,500 minus the accumulated depreciation was 34,500 into 12.5% depreciation rate. So 58,500 of the cost minus the accumulated depreciation into 12.5% will give us the depreciation on the plant. And if you see, my cost of sale has been updated because this includes now both the depreciation on the building and the plant. This is how we have completed our our second adjustment number 2. The question says that no depreciation has yet been charged on any non-current assets for the year ended 30th September 2025. So we have charged the depreciation. Now the question says that a provision of 2.4 million is required for income tax on the profit to the year 30th September 20x5. So provision of 2.4 million means current tax. So I'm writing an entry as adjustment number 3, tax expense debit, and the provision for tax credit by 2,400. The question further says that the balance on current tax in the trial balance is the under over provision of tax for the previous year. So the current tax given in the question relates to the under over provision. So what we are going to do, is that we are going to prepare an entry as current tax debit given in the trial balance, because this had a credit balance, so we are going to eliminate it by debiting it, and then we are going to transfer this into the tax expense by 1100. So when we debit the current tax expense, the credit balance given in the question will automatically be eliminated. So I'm tracking through this that this is now not going to be taken into the balance sheet or into the income statement or anywhere else. This has been transferred to the tax expense through the accounting entry. Now the question further says, in addition to the temporary differences relating to information 2, that was revaluation, Candy has further taxable temporary differences of $10 million. So the question is talking about deferred tax liability now. So we had a deferred tax liability brought down, and the question is informing the deferred tax liability carried down 10,000 of taxable temporary differences into 20% tax rate. So 10,000 into 20% tax rate will give us a deferred tax liability of 2,000. And if I go upwards and see the brought down balance of the deferred tax liability, it was actually 1,800. So this means that the deferred tax liability needs to be decreased. So my entry is going to be deferred tax liability debit by 200, which is 2,000 minus 1,800, and tax expense credit by 200. So this is how we have completed all of the accounting entries. Now I need to incorporate these entries to calculate the retained earnings correctly. So what I'm doing is I'm stretching the question, the answer sheet, so that I can see more area on the question paper. Okay, we have a question. Kulsum is saying, but the deferred tax is 250. Okay, I've taken an incorrect value maybe. Let me check again. Deferred tax, okay, it's 2,500. So let me correct the value written in the accounting entry. The deferred tax brought down is basically 2,500. So this means the entry should be reversed. It should be tax expense debit and deferred tax liability credit by 2,500 minus 2,000. Okay. Now let's also take some further questions. Usman is saying, can you please explain that why we did not consider 7,600 from revaluation? Usman, basically 7,600 we have already made an accounting entry. So that accounting entry will automatically incorporate 7,600. We do not need to record that again. So that is why we have not included it. Said Imran Shah is saying increase in deferred tax liability or decrease in deferred tax liability. Usman, actually the brought down was 2,500. The carried down we have calculated is to 2,000. So there is a decrease in deferred tax liability by 500 at the moment. This 500 actually ignores the revaluation impact. That will be incorporated in the balance sheet directly. Okay, now what we are doing is that we are calculating the adjusted retained earnings. Now, if we see we have credited the profit or loss in adjustment number one, so I'm writing adjustment number one, and credit actually means increasing the retained earnings by 1000. Again, in adjustment number one, we have debited finance costs, which means this will decrease the profits. Debiting finance cost will increase the finance cost and will reduce the profits. So this will become negative 2610. And I'm making this as bold. The bold basically means that we have incorporated the impact of this so that we can have control that which impacts have been incorporated and which impacts have not yet been incorporated. In adjustment number two, we have credited P&L. So this will be plus 2000, and I'm making this bold again. So this means that this has also been incorporated. The revaluation and deferred tax on revaluation will not be incorporated in the retained earnings. And then we have some depreciation of 5825 relating to same adjustment number 2. And further, if we go downwards, we have credited tax expense of 1100, minus we have debited 2400, and minus we have debited 500. So to incorporate tax, we need to have a net impact of negative 1800. I'm showing you the working again. That there were three impacts. We have debited tax expense 2400, increased by 2400, decreased by 1100, increased by 500. So there is a net increase of 1800. So the net increase basically will reduce the profits. So that is why the net total becomes a negative 1800. So that is all. If I calculate the sum equals to sum of all these values, this will give me the adjusted retained earnings of 8265. So this is how we have completed our requirement number one. That was to prepare a schedule of adjustments required to the retained earnings of Candy as a result of the information in note 123 above. So if you people have any question up to now, you can ask. Now we will be moving towards the second requirement, statement of financial position, as at 30th September 20x5. Yes, Umaima, this is how you have to solve the question in the exam too. That is why I have solved this in the real exam environment so that you people can be aware of what information should be given, how it should be given, how you're going to show the workings, everything. Yes, Kulsum, you can have the abbreviations too, but there is no use for that. We have already done the work in the adjustments. The question will not give any additional marks for the abbreviation. That, for example, if you write over here, reversing the issue cost expensed out. If you want to write this information, you can write, but there are no additional marks for this. So you can simply refer to adjustment number one that we have adjusted this. So these are the increase, decrease that will give us the total of the adjusted retained earnings. Now we are going to prepare a balance sheet. For balance sheet, I need to go back towards the question. Now I'm going to write the non-current assets heading. In non-current assets, we have property, plant, and equipment. We have investment property. That's it. Any other non-current asset we have? No. Then we have current assets, and then we have total assets. On the credit side, we have equity, in which we have equity shares. We have revaluation reserve that we have created. We have retained earnings, and then we will be having some non-current liabilities. In non-current liabilities, we have, sorry, in non-current liabilities, we have loan notes and we have deferred tax liability. Then we have some current liabilities. Now, this is basically the format. And at the end, we have total equity and liabilities that should match with the total assets. Now, if I see the property, plant, equipment, the value of property, plant, equipment in the question was 35,000 minus 20,000. 35,000 minus 20,000, which is actually 15,000. So I've incorporated this. I've incorporated this. Apart from this, we had some plant as well. So plus 58,500 minus 34,500. Although we have made some adjustments in these values through the double entries, but first we are going to write the values given in the question. And then we will be actually changing them through the accounting double entries. The investment property given to us was 20,000. So we have written this. The current assets given to us was 68,700. We have written this. All these values have been incorporated. The equity shares given to us was 20,000. There was no revaluation reserve given to us. The retained earnings given to us was 15,500, this value. And then we have some proceeds of loan notes, which was given to us as 30,000, this value. Now all these have been incorporated. Then deferred tax liability given to us was 20,500. The current liabilities given to us was 43,400. And the interest paid of 1,800 we have actually incorporated in one of our accounting entries. Let me show you where. In the interest cost of bank credit, we have already incorporated this 1,800. So now the first step is basically to incorporate the values from the trial balance into the balance sheet that we are preparing. Asad Khan is saying where we can have all the schedule for F7 which you have opened in PowerPoint. Asad, I will share the PowerPoint slide with you. In fact, I will try to create the WhatsApp group just in today's session so that you people can join immediately. Any further information required can be discussed over there. Okay, now if we see that now we have made some double entries starting from the loan notes, we have debited the loan notes and we have credited the loan notes by 1,008.10. So if I go towards the loan notes, the amount of loan notes was 30,000. I'm writing equals to plus 810 minus what? 1000. So the loan notes is now 29810, which we had also calculated in the amortization table. We can also use the value directly from over here, 29810. But a better method is to use the accounting double entry so that you can manage control that we have incorporated this loan notes, we have incorporated this loan notes. Now we have to incorporate the investment property minus 15,000. So let's move on to the investment property, write equals to so that the calculator basically starts, and then minus 15,000. So the investment property is basically 5,000. And then we have to debit the land by 5,000. So plus the 3,000 land debit plus 35,000 building debit minus 2,825 for the depreciation of building and minus 3,000 for the depreciation of plant. So we have incorporated these two values, we have incorporated these two values, and that's it. We had already incorporated the cost of sales. We had already incorporated the cost of sales over here, 5825. So now the next area, let's incorporate the revaluation reserve. So the revaluation reserve is equals to 38,000 minus 7,600 relating to the deferred tax. These are incorporated. Now let's incorporate the deferred tax liability of 7,600. For this, we need to move towards the non-current liabilities. And let's write down equals to over here. So equals to 2,500 plus 7,600. This have been incorporated now. Tax expense 2,400 incorporated in the retained earnings adjustments. And the current tax provision for tax should be added in the current liabilities by 2,400. This has been incorporated. Tax expense was already incorporated and the tax expense was again incorporated. Now we have to add the deferred tax liability by 500. So deferred tax liability I'm going to add by 500. Now I have actually added all of the adjustments. Now let's calculate the sum of all these values, which is 134,110. And let's calculate the sum on the debit hand side. The sum of all these values will be 144875. So let's see. Okay, the retained earnings we have not yet updated. The retained earnings after adjustment was 8265. So now the total is actually 144875 minus 126875, which is 18,000. So is there any value of 18,000 that we have missed? Let's see. Any value in the trial balance? No. Any value in the adjustments? Arshian is asking that double entries is compulsory to show to the examiner. No, Arshian, it is not necessary. We are doing this just to have our own control. Kulsum is saying that investment property should be eliminated. hmm Let's see, where have we done the mistake? We have taken the retained earnings. Let's check equity. Okay, here's the mistake. Actually, the equity shares was in the question, it was 20,000. This was 20,000 and we have written 2,000. Here's the difference of 18,000. So if I make it 20, our final accounts question is actually balanced. So if you are following the rule of double entry, so it is not possible that your balance sheet should be out other than any typing error or other than any calculation error. So this was the first question. If you people have any question in this, you can ask. We have only 30 minutes right now and we have a complete question to go. Any question you people can ask. Okay, now let's move on to the next question by the name of Moby. Shanisha is asking that can I get the recordings? Yes, Shanisha, you can leave for work and you will get the recordings uploaded by the management. Kulsum is saying that, but when we have sold the first investment property and then why the heading is still there? Kulsum, because we may be having multiple properties. We have sold one and we have transferred one into the property plant equipment, but maybe there may be some third investment property. That is why it is being shown in the balance sheet. Rishal is saying that I'm facing some internet failure issue. Can you please show me the presentation of the last question? Okay, Rishal, basically, let me show you. This was the last question that we have just solved. And one more thing that we have good in this GoCB Global is that we have an export option. If I click on the export button, it will actually open a new window and will download the answer into an Excel file. And then you can actually use that Excel file as well. So I will be making the WhatsApp group, or I think I should be making the WhatsApp group. Let me create the group right now, and then I'm going to share the details. So if you see, the Excel file has now been downloaded. If I open the Excel file, now you can see the entire answer has now been downloaded onto the Excel file. The income statement, you are going to find all of the linkages that we have created. So this is the Excel file. You can find all of the linkages that we have created over here. All of the values you can find linked So what I will do is actually I will share the Excel file on the WhatsApp group so that you people can actually directly use the Excel file. Even if the students have not been attending the session live, they can have the WhatsApp. Um, they can still join the WhatsApp group later and can ask for the files over there. Yes, I will be sharing the saved Excel file so that everyone can benefit from this. Usman is saying that this take more time in CB than on paper. Yes, Usman, basically in CBs, because we are not used to of working on the Excel, that is why it comparatively takes more time. But if you do this frequently, if you are solving every question on the Excel, in that case, you will comparatively take less time. So the WhatsApp group is now creating, and I will share you the path. Imran is asking to share my number. Imran, my number is +92 334 3739697 +92 334 3739697. So you people can share this number, save this number. Okay. Yes, Usman, the questions will now be made according to the CB's requirements. Okay, I'm sharing the group link. You people can join this. HTTPS chat.whatsapp.com/7in1 capital J capital M small a capital O small q small u capital X capital E small v small y 4 capital J small o capital M capital U capital Q B U. So this is the link I'm sending you to you people on the chat box. If you people have any problem joining the group, you can simply drop me an SMS on WhatsApp and I will send you the link directly. Okay, so now we are done with the first question. Let's move on to the next. I'm closing the window. I want to leave and I want to start the new question now. This is by the name of Moby. Okay, so the question has loaded. Now the requirement says prepare a statement of profit or loss and other comprehensive income for Moby for the year ended 30th September 2023. Prepare a statement of cash flow. Prepare a statement of financial position for Moby as at 30th September 2013. And in the note, question says that a statement of change in equity is and notes to the financial statements are not required. And the following marks allocations provided as guidance for this question. Now, this is a bit old question. That is why it is of 25 marks. Now the new questions will be of 20 marks. So again, what we are going to do, 1, 2, 3, 4, 5, 6. After 6 columns, we are making a column small and we are going to write double entries over here. Are the double entries useful to you people? or you have or you people are finding it difficult? Because it actually makes this the control over the answer strong, and the accounting is all double entries. So if you are saving yourself from the entries, you can never be a good accountant. Okay, Wilson is saying that yes, double entries is good, and Arshian is saying that it is difficult. Usman is saying that it's useful to control and pass adjustments. Yes, useful. Okay, that's good. So it is not necessary to prepare the entries. If you people are finding it difficult, you can leave it. But actually, my way of teaching is through double entries so that more people can get a good control, the balance sheet remains balanced, and practically you can have some good value in the market. Okay, now let's start the question. The question says that the following notes are relevant. The balance on the construction contract is made up of the following items. Cost incurred to date is $14 million. Value of contract billed, which means work certified, is $10 million. So we have incurred a cost of 14 and we have billed the customer of $10 million. So if I go in the trial balance and if I see there's a construction contract note number 1 of $4,000. So this means that we have incurred a cost of 14 and we have received the cash from the customer of 4 of 10. The net balance is 4, which is shown in the trial balance. Now the question says that the contract commenced on 1st October 2012, which was the start of the year, and is for a fixed price of $25 million. So the revenue is $25 million. The cost to complete the contract at 30th September 2013 is estimated at $6 million. So we have incurred 14 million and further cost we are going to incur is 6 million. So the total cost is expected is 20 million. MOBI's policy is to accrue profits on construction contract based on the stage of completion given by work certified as a percentage of the contract price. So what we are going to do, this is a question relating to IFRS 15. Usman is saying we can do working on extra paper by hand, right? Yes, Usman, you can do it. But for example, if you have done some working which was half correct and half incorrect, if you're doing a working which is half correct and half incorrect, but you have written it on the paper, the examiner will give you 0 because your answer is incorrect and he does not know what error have you done. But if you are showing the working on the spreadsheet question, on the spreadsheet of the answer, the examiner will give you the marks up to where you have done correct. And from where you have done the error, only those marks will be deducted. So it is always better to perform all of the workings on the spreadsheet. Do not write anything on the paper apart from what you feel good. Okay, so you people can simply drop me an SMS if you're finding it difficult to join the group. I've just created it. You can drop me a message on my contact number. I will add you to the group directly. Okay, now what we are going to do is actually in IFRS 15 construction contract, we need to calculate the revenue, we need to calculate the cost, and we need to calculate the profit. And apart from this, we need to calculate the percentage of completion. So the percentage of completion should be work agreed, which is 10,000 divided by the contract price of 25,000 into 100, which means that the project has been 40% done. Or you can even use this percentage to convert the value into the percentage. So the work done is actually work agreed of 10,000 divided by contract price of 25,000, which makes the work 40% done. So the revenue is going to be 25,000 into 40%. The cost will be negative which is 14,000 plus 6,000. We have incurred 14, we will incur further 6. So total cost is 20,000 into 40% should be the cost, and the profit should actually be the total of $2,000. So this is how we actually calculate the profit on the construction contract under IFRS 15. So now what entry are we going to make? We are going to record the entry as bank debit and revenue credit by the amount of $10,000. This is the amount of revenue. And according to the question, we have already received $10 million. So that is why I have used bank. If the amount would have been receivable, we would have treated this as receivable. Now, secondly, the cost of sales was by the amount of 8,000 and the cost incurred to date is of 14,000. So this means that the difference of this amount should be a balance treated as due from customer. The amount, the difference we treat as a due from customer in the current assets. So this is how we prepare the double entries in case of IFRS 15 construction contracts. Yes, Toeb, we are actually short of time. That is why we have moved on to the next question. But you can try this at home and you can discuss on the WhatsApp group if you have any problem. So we have made an entry as cost of sales debit by $8,000 and the cost to date of $4,000 with $6,000 being treated as the due from customer. We have calculated this as a balancing figure. Now in adjustment number 2, the question says that Mobi decided to revalue its land and building for the first time. On 1st October 2012, we have decided to revalue the asset at the start of the year. A qualified valuer determined the relevant the relevant revalued amount to be 16 million for land and 38.4 million for the building. So let's check the value of the land and building in the trial balance. The land was 12 and the building was 48. And apart from this, the building would have been depreciated as well by $10,000. So if I write the net book value of the land, it is going to be 12,000. The net book value of the building is going to be 48,000 minus 10,000. And the fair value given by the question is 16,000 for the land we have to check the zeros properly because in the last question our balance sheet got out because of the zero. Elvin, can you drop me an SMS personally? If you drop me an SMS personally, I will add you directly. Okay, so the fair value of the building given is 38,400. So if I write the accounting entry, I'm going to say land debit and building debit. Land is going to be debited by 16,000 minus 12,000. And if I copy this and paste this underneath, you're going to see that it will apply the formula automatically onto the building. And I'm going to credit the revaluation reserve through OCI by the total. And then the question further says that the building remaining life at the date of revaluation was 16 years. So I'm going to charge the depreciation of the building into cost of sales. And I know that the plant will also be depreciated. So the value of the building was 38,400 divided by its life of 16 years. So the total depreciation in the building is 2,400, and I'm writing the sum so that whenever I charge the depreciation on plant, my cost of sale will automatically be updated. It is not necessary because all workings that we are doing are already in triple zeros. Okay, now we have used the depreciation of 16 years. The question further says that this revaluation has not been reflected in the trial balance figures above, so we have already reflected. MOBI does not make a transfer of the revaluation reserve to retained earning in respect of the realization. That's good enough. Deferred tax applicable is 25%. So what we are going to do, we will be debiting the revaluation reserve and we will be crediting the deferred tax liability. By what amount? 4,400 into 25%. So this is how we have charged the revaluation of the asset. Now the question further says that the lease plant was acquired on 1st October 2011, which means 2 years back from the year end, under a 5-year finance lease. Now the finance lease is known as lease, which has an implicit rate of 10% per annum. The lease rentals implicit rate is 10%. The lease rentals are 9.2 million per annum payable on 30th September each year. So now the question is talking about lease. So for lease, what do we do is actually we prepare a table. The table as date, interest, rentals, repayment, and carried down. So the asset was taken on lease on 1st October 2011. Let's see the value of the asset given in the question. The lease plant at initial carrying amount was 35,000. So the asset was initially taken on lease for 35,000. Now the lease rentals are being paid at each year end by 9.2 million. So the first rentals would have been paid on 30th September 2012, which was the last year. And the interest would have been 10%, with the rentals being 9,200, and out of 9,200, 3,500 is the interest. So the repayment would become so the carried down would become 29,300. This value should be there in the trial balance, and if you see, this is there 29,300. So we are going on the right track. These are the values that the question has already incorporated and already accounted for. Now we need the accounting of 30th September 2013. So if what we do is simply copy this and paste this, it will automatically calculate the values for the current year. Okay, so 30th September 2013, and then we are going to also calculate one more year, 30th September 2014, copy and paste. So all values we have got now. So the question has done the work over here. The finance cost relevant for us in the current year is going to be 29. 30. The amount paid during the day is 9200. The repayment, the current liability is going to be 6897, and the non-current liability is going to be 16133. So what we can do is we can prepare a single entry covering all values, being finance cost debit, lease liability, which was recorded by the question. We are actually debiting that so that that gets eliminated, and instead we are going to record our own lease liability as current and non-current. And we have paid some rentals during the year from the bank. So my entry is going to be finance cost debit by 2930. Opening liability given by the question was 29,300. We are debiting it, eliminating it. The current liability for us is 6897. The non-current liability for us is 16133, and the rentals that we have paid is 9200. So this is how we can apply the entire accounting of the lease for in one double entry. You do not need to make multiple entries. There's a question that why I have calculated till 30th September 2014. The reason is that my finance cost is 2930. The rentals that I've paid is 9200, and now my liability is 23060. Now my liability is 2360, out of which 6897 will be paid during the next year. So this should be current liability, and remaining should be the non-current liability. So that is why we need to calculate for one more year. So now we have done the adjustment of lease as well. Then the question says that owned plant and equipment is depreciated at 12.5% per annum using the reducing balance. So we had already left some space for the depreciation. Okay, so we have done the adjustment relating to lease, and we have a you people are requested to provide the feedback. So I'm stopping for 2 minutes so that you people can provide the feedback of the session, about today's session, so that we can even improve further. So you people can quickly provide the feedback so that we can continue with the question. Okay, thank you, Gulsoom. Thank you, Zahid. Thank you, Sahar. Asad, you can drop me an SMS personally. I will add you. Okay, now so let's continue. Thank you so much. So the depreciation for plant is going to be on reducing balance basis. So we are charging 65,700 minus 17,700 of the accumulated depreciation into the depreciation rate. For that, we need to go back downwards. It was 12.5%. So into 12.5% will give us the depreciation of the plant. And if you see, this will automatically be added to the cost of sales. And apart from this, we also have the leased asset. So I'm adding 35,000 of the leased asset carrying amount divided by 5 years because the lease was 5 years. So now the total depreciation for the plant for both the owned and the leased is 13,000. And if you see, the cost of sales is now again updated. So we have charged the depreciation of 12.5%. We only have 7 minutes left and we need to go through three different adjustments. So adjustment number 3, the question says that on 1st October 2012, which is the start of the year, Mobi received a renewal quote of 400,000 from the company's property insurer. The directors were surprised at how much it had increased and believed it would be less expensive for the company to self-insure, which means that the company can bear the risk on its own. Accordingly, they charged 400 to administrative expenses and credited the same amount to the insurance provision. So although they have not insured themselves from the insurance company, but still they have recorded insurance premium. So is it correct or not? It's not correct. When you are not insuring, what are you recording the provision? So what we will be doing, we will be debiting the provision back, provision for insurance, and we will be crediting the administrative expenses by what amount? 400. Now the question further says that during the year the company incurred 250,000 of expense relating to previously insured property damaged, which it has debited to the provision. The company has incurred cost of 250, which they have debited in the provision and credited the bank. Is this the correct entry? Obviously not. The correct entry was administrative expenses debit and the bank credit, because the cost that we have incurred based on the self-insurance is our expense. So the entry should have been 250 administrative expenses debit bank credit. So now what correcting entry should we be recording? Because the question has recorded an incorrect entry, so we should be debiting the administrative expenses by 250 and we will be crediting the provision which the question is already debited. So your entry is administrative expenses debit and provision for insurance credit for adjustment number 3. Okay, sir, you have written a very good long message for the feedback, and thank you everyone else too. Toyab, Lavender, Hidayat, Zahid. Okay, so now adjustment number 4. In adjustment 4, the question says that a provision for income tax for the year ended 30th September 2013 of 3.4 million is required. So we need to record a provision of 3.4. So the entry is going to be adjustment number 4, tax expense debit and provision for tax credit by 3,400. The balance on current tax represents the under over provision of the tax liability for the previous year. So we should eliminate that. Let's see the value. The current tax is credit 1050. So what we are going to do is we will be eliminating this by debiting the current tax, and we will be crediting the amount of tax expense by 1050. Now we need to record the deferred tax impact, for which the question says that at 30th September 2013, the tax base of Mobi's net assets was 24 million less than their tax carrying amount. So we need to calculate the deferred tax liability. For this, we need deferred tax liability brought down. We need deferred tax liability carried down, and the question says that there is a 24,000 difference into 25% tax rate will give us the deferred tax liability. And this does not include the effect of revaluation because we have already included the impact of revaluation. So let's check the deferred tax liability brought down, which is given as 8,000 in the question. So the liability needs to be reduced. So we will be debiting the deferred tax liability account, and we will be crediting the tax expense by what amount? 8,000 minus 6,000. So this is the entry. And the last entry, the question says if admin can give us just 2 more minutes. I would request the admin to give just 2 more minutes so that we can just complete the entries. Then the students will be able to complete the question at their home. The 40 million loan note was issued at par on 1st October 2012. It was issued at par, which means that the brought down balance in the table is going to be the par value of 40,000 in year one. The finance cost or the interest expense will be on the effective rate. The interest paid will be on the coupon rate, and we will have amortization and then the carried down. So the question says that no interest will be paid on the loan. So the interest paid is 0. However, it will be redeemed on 30th September 2015 for this amount, which gives the effective finance rate of 10%. So the interest expense is going to be 10% and the interest paid is 0. So the entire amount is going to be amortization, and the carried down is going to be 40,000 plus 4,000. So your entry is going to be adjustment number 5, finance cost debit, and the loan notes credit by what amount? By the amount of 4,000. So this is how we have completed all of the accounting entries, and the time's also up. So you have to solve the remaining question on your own at your home. What I can do for you is that I can complete the question on my own after the session, and I will show I will share the complete Excel file on the WhatsApp group. So you people can join the WhatsApp group. I've shared the link. You can text me personally if in case that you want, if in case you are unable to join the group. Thank you, everyone. Thank you for the session and take care. I hope the session was useful to all of you. Looking forward to meet you tomorrow. Take care and Allah Hafiz.